Okay, so we're going to talk about the 3 steps for NVIDIA employees to diversify your RSUs and minimize your taxes. Okay. You, of course, this is for informational purposes. You should talk to your professional, tax or financial professional. So here's the agenda. We talked a little bit about my background, and then we're going to walk you through these steps. So step 1 is determine if you should diversify your NVIDIA RSUs and ESPP. Step 2 is decide how much and when you should diversify. And step 3 is minimize your taxes when you do diversify. And then at the end, we'll have some live Q&A, so happy to answer any questions. And then if you guys have questions as we go through the presentation, feel free to drop them in the chat. And what I'll do is at the end, I will look at those and answer those questions. And I know that I've done a number of these webinars, and some people are very happy to ask the questions in the live Q&A. Others prefer to be in a more private setting. So what I also want to do is anybody who wants to, who has questions about their specific situation, feel free to, I'm going to put a button up now. Should say schedule now, but if you want to talk about your situation, how to diversify your NVIDIA RSUs and ESPP, then feel free to click on the button, schedule now, and then you'll get to my calendar and you can put a free virtual consultation on Zoom with me. We have a quick chat. I'm happy to answer, no cost, no obligation, but happy to help. All right, so here's my background. I worked in tech for about 20 years, as I said, so some startups and then bigger companies like Yahoo, eBay, Intuit. So I have been through what you guys have been through somewhat, having worked in tech myself. But as I said, I built this firm. I only work with tech people with equity, and so people just like you. And I'm here because I'm trying to help people like NVIDIA employees understand how they can really make the most of their equity. All right, so step 1, let's start. Let's determine, first of all, if you should diversify your NVIDIA RSUs and ESPP. So that's the first question. So I talk with clients all the time about this concept of concentration. And a concentrated stock position just means you have too much of a single company's stock. Question is, how much is too much? In general, for my clients, I say, hey, more than 20% of your investable assets, if it's in a single company stock, then you should consider diversifying, okay? And that's just because you get a ton more volatility and risk versus a diversified portfolio. Now, let me illustrate what the real risk is. So this chart is showing you Silicon Valley Bank shares. You can see it was up above $700 a share, and then the bank failed. So some of you, I'm sure, are familiar with this, but Silicon Valley Bank was the 16th largest bank, been around for decades, and company was doing well, stock was doing well, and then in March of 2023, there was a bank run, and the bank failed. Stock was worth nothing. Okay, so I have a good friend who used to work at Silicon Valley Bank. He has a former coworker he talked to who had $7 million, all of it in Silicon Valley, almost all of it in Silicon Valley Bank stock, and he was about to retire, and almost all of it went away because of this failure. So that is the real risk, is if you're too highly concentrated in a company, something happens beyond your control, and that company goes out of business, a lot of your net worth can also go away. So that is the real risk of being too concentrated. So how do you determine if you should diversify? So I'm going to walk you through 4 simple steps, and then we'll do a quick example. So step 1 is Just calculate the total value of your vested NVIDIA equity. So that's your RSUs, that's ESPP, any other stock you may have. Use the current stock price. Step 2 is calculate the total value of investable assets. That's outside of your NVIDIA equity. So savings, investment accounts, retirement accounts, 401k, add that all up, add it to your vested equity value. Step 3 is you just divide the total of your vested NVIDIA equity by the total value of your investable assets. You get some percent of concentration. Step 4, if your concentration is more than 20%, then you're highly concentrated and you should consider diversifying. Okay, so quick example. Let's say you got 4,000 vested RSUs, ESPP. Let's say it's $100 a share. Keep the math easy. That's $400,000 worth of vested NVIDIA equity. Okay. Now, if you add up the rest of your savings, investments, 401k, let's say it's worth $600,000. You add your $400,000 of equity plus your $600,000 investable assets. You have $1 million total. You divide your $400,000 of NVIDIA value divided by your $1 million total, 40% concentration. Your 40% is more than the 20%, so you're highly concentrated. Okay. If you are, then you ought to think about diversifying. Now, I, again, work with only tech people here in Silicon Valley, so it's fairly common for people to come to me with 50%, 70%, 95%, all in a single company stock. But so if you have a lot more than this 20%, I wouldn't be surprised, but it's something you should be aware of. And then something, if you do, then you should think about how you're going to diversify. Again, if you guys want to talk about your specific situation, feel free to click on the schedule now button and put time on the calendar to talk about your situation. Okay, so step 2. All right, decide how much and when you should diversify your NVIDIA RSUs and ESPP. So let's say you do the concentration, you just determine it's too high, then here's how I would think about it, okay? Here's how I work with my clients. So first of all, I would sell immediately to cover any valid near-term cash needs. So if you need cash for some reason and it's valid, then go ahead and sell. There's no reason to hold. So examples would be if you have to pay taxes, you know you're going to owe taxes on your RSUs, then you're going to have to pay taxes come April. Go ahead and sell it. Okay. If you don't have an emergency fund, right? So if for job loss, medical issues, then I would raise that, make sure you have that. Or for example, you're going to buy a house in the next 6 months, a year. You need a down payment. Go ahead and get it out in cash. Okay. Because what you don't want to happen is, let's say you want to buy a $2 million house, you need to put $400,000 down, and you say, okay, I have it in stock, and then you get, you're ready to buy the house, and then the stock drops in half, you got to sell twice as much, okay? Get the cash out if you need it now. Okay, the second step is decide if you want to keep some percent of your equity for the long term. So clients often will say to me, hey, I want to hold some stock because I'm a long-term believer in the company, future of the company. So that's fine. I recommend you keep at most 5 to 10% of your investable assets, but you need to figure out what percent you're comfortable with. It could be higher. It could be 20, 30, 40, 50, whatever. But you need to make a decision about, okay, I'm going to keep this percent. I'm going to carve that out. I'm not going to touch it. Okay, so that you have a long-term stake. Okay, after you decide that, then you have some percentage left over. So let's say you decide I'm going to set aside 10%. Okay, now you have 90% remaining to sell. Okay, there are 3 ways of selling. One, the simplest is sell immediately. So you sell everything right away. Okay. So you get your cash out. You don't have to worry about the stock going up or down. Most of my clients don't want to do that because stock has gone up a lot. The benefit is you don't have to worry about going up and down. You also have to pay all your taxes in 1 year. Okay. Now the two other versions that most of my clients prefer, sell over time on a schedule, and then sell over time on a schedule more when the price is higher and less when it's lower. So let me explain this. Sell over time on a schedule is simply you say, I'm going to sell 25% a quarter over the next 4 quarters. So the beginning of each quarter, I'm going to sell. I'm not going to try to figure out if the price is high or low. I'm just going to sell it. And the benefit is you put it on autopilot. You minimize the emotions so you don't try to figure out is the stock high or low, and you just sell. Okay. And you can figure out whatever schedule. It could be 10% a quarter over 10 quarters, whatever works for you. And the benefits are you minimize that emotion. Also, you spread it out over multiple tax years. Okay, so not all income hits in 1 year. And then the other variation is you sell over time on a schedule, but you sell more when it's higher and less when it's lower. So you can set price bands. You could say, all right, if the price is less than 130, I'll sell 10% of those remaining shares. If it's between 130 and 150, I'll sell 25%. If it's more than 150, I'll sell 50%. Okay. And then each quarter, beginning of the quarter, whatever date you pick, you say, okay, where's the price? So if it's whichever band it's in, that's the percent you sell. So if it's at 120, you sell 10%. Next quarter, it's at 140, you sell 25%. Next quarter, it's at 160, you sell 50%. Okay. And you just do that each quarter until you've sold through. Okay. So again, benefits, autopilot, you minimize your emotion. And then you also spread the taxes out over multiple years. And you're going to sell more when it's higher, less when it's lower. Okay, so those are ways of thinking about how much you should sell and when you should sell it. So step 3 is, all right, how do you minimize your taxes when you do diversify your NVIDIA RSUs and ESPP? So after you decide on a selling plan that we just talked about in step 2, then you want to minimize your taxes when you sell. And I'm going to talk to you this slide on RSUs, the next slide on ESPP, because they have different tax treatment. So RSUs, okay, you likely know this, but just to remind you, you pay ordinary income tax at the price of the stock on the day you vest. So if you vest today, stock is at 130, then it's as if you got $130 of income, just like your salary, and you pay that tax when you vest. Now, when you sell, okay, you're going to pay tax on the capital gain. That's the difference between the price you vested at and the price you sold it at. So, for example, you vested $100 a share and you sell it $150, you have a $50 capital gain. Okay. Now, the timing also matters. So if you sell less than or equal to a year, then you're going to pay short-term capital gains. And the highest rate on the federal is up to 37%. Okay. If you sell greater than a year, you've held it more than a year, then you pay long-term capital gains. Okay. And the highest rate there is much lower. It's only 20%. So a critical thing to understand is, do you have short-term or long-term capital gains? If you sell long-term versus short-term, you can save up to 17%, right, on your taxes. That's the highest, the 37% for short-term versus 20% on federal. That's a 17% difference. $1 million, it's $170,000. It matters, okay? So the specific steps to minimize your taxes when you sell your RSUs. So first, look at all your RSUs, figure out which ones qualify for long-term cap gains, okay? And then what you want to do is you want to compare the long-term capital gains of your RSUs to the ESPP that have long-term capital gains, right? And then sell the shares that have the smallest gain, because that's going to minimize your taxes. And then just continue to do that. And the last ones you sell are the ones with long-term cap gains that have the highest gains, okay? In general, if you've been there a while, ESPP prices, the cost base is what you paid for. It's probably going to be a lot lower than recent RSUs, okay? And then if you have RSUs have short-term capital gains, I would either hold those until they qualify for the long-term cap gains, more than a year. But if you're ready to sell or you need to sell, then just do the same thing. Start with those with the smallest gains and end with the highest gains. So that's RSUs. Now for your ESPP, and just to make sure, refresh people with your employee stock purchase plan, ESPP, employee benefit, you can buy discounted NVIDIA stock. They take out some percent from every paycheck. At the end of this offering period, 6 months, they then buy stock at a discount, okay? Now the tax treatment for ESPP is you're going to pay ordinary income tax, again, that 37 up to 37% when you sell, unless you meet two criteria. If it's more than a year after the purchase, okay, so you purchased through your ESPP and then it's more than a year, and more than 2 years after the grant date, which is the beginning of the offering period. So your offering period starts when they start to take out your paycheck. It's usually 6 months before the actual purchase, okay? Now, if you meet both of those criteria, then you can pay long-term capital gains, which is up to 20%. So again, save up to 70%, sell your long-term cap versus short-term cap gains, okay? That's the key. So for your ESPP, minimize taxes, same thing. Figure out which ESPP qualify for long-term cap gains, okay? Compare those long-term cap gains, ESPP, to the gains in your long-term cap gains RSUs. Start with the shares with the smallest gains and sell those until you get to the shares with long-term cap gains that have the highest gains. And then again, if you have short-term gains, hold them till they qualify for long-term cap gains. Or if you need to sell them, then start with the smallest gains and end with the highest gains. Okay, so that's the ESPP. Now, the additional ways for you to minimize your taxes when you diversify is minimize your income, because the lower your income, lower tax bracket, so your shares get can be in a lower tax bracket. So the way to minimize your income as an NVIDIA employee, you can max out your NVIDIA 401k, the pre-tax, and that's in 2025. So you can put in $23,500 if you're under age 50, $31,000 if you're 50 or older. Okay, that's the first thing you should do. You can also max out your, you have what's called the Mega Backdoor Roth. Okay, that's a way for you to save more in your 401k with after-tax contributions. So you can save up to $70,000 if you're under 50, $77,500. If you're 50 or older, that's your contribution plus company match plus these after-tax contributions. If you want details, go to my website. I have a video on this, the NVIDIA one. Now, also, if you're interested in charitable giving, you like to give, then if you donate to a donor advised fund or a DAF, that's another great way of minimizing taxes. So the way it works is you donate to this DAF, you get the tax deduction immediately for that donation, and then you can donate from the DAF for as long as it takes you to use it up. It could be 5, 10, 15, 20 years to use it up. So for example, if you donate $100,000 of highly appreciated NVIDIA, either RSUs or ESPP, okay, that just means they have long-term cap gains. You donate that to the DAF. Okay, you don't pay any taxes on the gains, so that's great. You also get a $100,000 tax deduction. So charitable tax deduction, if you're in the highest bracket, that could save you up to $55,000 in federal California taxes. And then you still get $100,000 to donate to charities for as long as it takes you to use it. So, and if you're interested in giving, this is a great way to save on taxes. So for most NVIDIA employees, The best and the simplest way to minimize your taxes is to minimize your income, like we just talked about, sell your NVIDIA following the steps we just went through, pay your taxes, and then start using your proceeds to get to all your financial goals, like buying a house, paying for college, getting financial independence. Okay. There are a lot of people who talk about a lot of other ways in general, unless you're in very specific situations, it doesn't make sense. But it depends on your situation. So that's how to minimize taxes. So let's talk about next steps here. Again, varies by individual. So if you want to talk about your situation, just schedule, no cost, no obligation, one-on-one. I'm happy to answer your questions. You click on here, you click on the schedule now button, just put time on my calendar. I'm happy to chat. Okay. So before we get to the live Q&A, I want to talk to you about the happy path. Okay. And the happy path is just, if you're an NVIDIA employee, you've been there a while, then you have the opportunity that most people don't. And I'll just give you the story. As I had clients come to me, they're at a big tech company. They had a lot of RSUs, and they were kind of like, help me figure out what to do. So we sat down, we talked through their goals, we looked at what they had, put together a plan to diversify the RSUs to minimize taxes. They were able to buy a house in the Bay Area. They have 2 kids. They're able to fund college for the kids. And then they want to get to financial independence early. So we have put them on the path to get there soon. Okay. So this is what I can help clients do ideally is take this value and equity and then help them do the things that are really important for them, like buying a house, paying for college, getting to financial independence. So that's what the happy path looks like. All right, so let's take a minute now, and I'm happy to answer any questions for you. So why don't you guys let me know what questions you have. Let me check the chat. So will this webinar be recorded? The answer is yes. Everybody who registered for the webinar, you will get a link to the recording by end of day today. So you can go back, look at the slides, etc. And if you want the slides or anything, then feel free to email me at tom@vestedfinancialplanning.com. Okay. So I do want to take a minute. We have a couple of minutes here. Any questions? Anybody have any questions? Can you talk more about the mega backdoor Roth? Chen Hui. Yes. So the mega backdoor Roth is available at NVIDIA. Okay. So you're familiar with the 401k. And as I said, that lets you contribute $23,500 pre-tax into your 401k. Okay. That also, so that includes the 23.5. I'll tell you what it includes. It also includes the company match. Okay. So the company match, I know that what it leaves, what it left last year was about $30,500 in after-tax contributions. Okay. So you have the components are your pre-tax contribution, the company match, and then your after-tax contribution. And you can do the $70,000 if you're less than 50. Okay. Now, not only can you contribute more, okay, but you have the ability to take that after-tax contribution and immediately roll it over to a Roth. Okay. And the benefit of that is once you put into the Roth, that will grow, could grow for decades. And then when you take it out, you don't get taxed on the growth. So it's a way to save more, and even better, you get to put it into a Roth, and then all that growth becomes tax-free. And just to compare it to your pre-tax 401k, you put it in, it'll grow, 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 grow. And then when you retire, you take it out, you're going to get taxed on the growth. Okay. So the 70,000 includes, yes, your pre-tax contribution, the NVIDIA company match, and then your after-tax contribution. It's a great way, as long as you have the funds to, pay for your living expenses, to save. Okay. Farhad, what about the argument for not contributing pre-tax 401k, but instead contribute fully to mega backdoor Roth, pay taxes now, reap tax benefits later? Okay. You could choose to, so Farhad is asking that first $23,500, you could contribute either into pre-tax contribution or a Roth contribution, which is an after-tax contribution. The reason in most cases that pre-tax contribution makes sense is that you are likely in the highest tax bracket you're ever going to be in. Okay. So because of that, you want to reduce your income, which is what the pre-tax contribution lets you do. You could put it in the Roth, but the problem is that when you retire and you take it out, you're likely going to be in a lower tax bracket because, again, you're in the highest tax bracket in your career, your life that you're likely going to be. So that's why it makes less sense for most employees. Okay. And sorry, I realize it is 11:31, so I want to be aware of everybody's time. So thank you all for coming. Again, if you want to talk, just put time on my calendar. You'll get the recording. You can watch it. And then if you think it would be helpful for any of your coworkers, feel free to forward it. I'm happy to help people however I can. So thank you all for coming.